Trendlines. This is the #1 retail trap in the market and most traders fall for it daily. They look clean, logical, and predictable. But that is exactly why smart money uses them against you. You enter on the touch and then you get stopped out. Price reverses and then you watch the real move happen without you. In this video, I'm going to show you how the real moves happen and how you can stop getting liquidated. So let's move on to the charts where I break it down for you bit by bit. All right, trend lines. Now, trend lines are the #1 chart pattern that's known by every single retail trader. The reason I say this is because I like trend lines, but I don't love trend lines. I use trend lines, but I also don't use trend lines. And you're gonna see why. Notice that this is the form of a trend line. This is another form of a trend line. The difference between these two is one of them is to the upside and the other is to the downside. Now, how do we validate a trend line? We validate a trend line when a trend line has 1 tap, 2 tap, 3 taps. And then once the trend line reaches the 4th one, it's validated, so it's expected for you to enter a position to follow through. Now, for a bearish trend line, we do the same thing, but the thing is, when we have a bearish trend line, we're waiting for the tap up top and then to the downside. But that is not the case anymore. Why do I say that is not the case anymore? Is because we want to know something that is called liquidity. Liquidity is the fuel of the market. Because of liquidity, price moves from one place to the other. Now, what does that mean? It means that, let's say you want to go from a destination, point A to point B. In order for you to go from point A to point B, you're going to have fuel in your car. If for any reason you are short on fuel on your way to the destination, you have to stop at a gas station, fuel up, and continue the trip. It's the same with price, but instead of fuel, we have something that's called liquidity. Money in the market is not created nor destroyed. When you win money from someone that lost money, and when you lose money to someone that is winning money. So it goes from one place to the other. How does this happen? It happens because right now the patterns have changed, the trading have changed, and we have to adapt accordingly. The reason I say this is because once we have these taps that happen into the market, so when you have a trend line having 1, 2, 3 taps, you are expected to enter the position over here, but everyone also is expected to enter the position over here. So what happens is this box over here becomes liquidity. Let's mark this out. We'll have this box be liquidity. Liquidity is residing under. We know that everybody else's liquidity and stop losses and pending orders are also residing over here. The reason I say this is because let's say after we know the trend line is validated, we want to enter a position over here, the stop loss beneath, and then what happens is you will see that price will continue to, let's say this is the body, price will continue to have a wick into the liquidity and then go in your direction. Now price does this because this goes back to the fuel. Let's move on to the bearish market trend and let's think about it. And before I even say anything, take like 5 seconds, pause the video, and then try and figure out where the liquidity might be and what would happen for you to not take a loss. Okay. So now that you've paused the video, you do understand that over here, after having 1 tap, 2 taps, 3 taps, that trend line is validated. But you also know that the liquidity has to be taken before the move to the downside. Now, if it doesn't happen, this also could happen and the move could go to the downside. But what you should understand is more times than not, the liquidity should be grabbed for the fuel to be achieved. Now, we're going to move on to the charts. I'm going to give you like 2 to 3 examples that you're going to see this happening in real time. What I want you to focus on now is the ranges. I want you to see where we are in the market, and also we can see the clear trend line. Now, how do we validate a trend line? We have 1 tap, 2 taps, 3 taps, and now the trend line is validated. So what you're looking for is that once you have another tap, you want to buy. But remember, I want you to think about one thing from now on every time that you see a trend line. Think about the trend line as being the liquidity line, okay? So this money dollar sign I put is for me to remember that liquidity has to be taken out. Now, this is what happens, and this is why the confusion is happening, and this is why it's so complicated to everybody before you even know what you're doing. So if you understand the ranges and where we are in the market, you can clearly see that this was the last push. So before we have, so from this high to this low, this was the last push. So this is the range that we're operating in. What we also need to focus on is we need price to close either above this range or below this range over here for us to know if we are buying or selling. Remember I did a video about having the body close over the wick? Well then, now you know that when we have a body close over this one, this is when we know we are now bullish. But if we have a break under this trend line, we are not looking to sell because the break should be under this range over here. Everything in between is internal. So I'm gonna let price play and you're gonna see what I mean. Focus on that. Over here, you had a clear break of structure, which we want to mark in this manner like so. So you have this one over here and we want to mark this as break of structure. Now, obviously I want to extend it so you see that this is a body close over the wick of this range. So now we are looking to buy, but we still need our last confirmation, which would be taking these stop losses over here. Now, this would happen in the form of a strong push to the downside, grabbing the liquidity, going back above the trend line, retesting, and then you take the position. Remember, in the markets, we want to wait for confirmations before execution. We don't want to try and predict what the market is going to do because this will not work out in our favor long term. So if I play right now, we are going to see that price is going to retest to the trend line. After it does give us the retest to the trend line, look at what happens over here. It shows rejection. So what are people thinking? People are thinking right now, buy, buy, buy. So if you were to do that, if you were to go ahead and do that and buy from this point over here, you would have a push to the upside. Let's say you're targeting the high or even this high. And here's what's going to happen. You want to have, of course, a very minimal stop loss because you know that this is the trend line or whatever the case may be. This is a good example. And then it invites you in and then takes you out. So even if your stop loss was even that big, you're still gonna get stopped out. Even if you look at this point over here, which I doubt that you're gonna do this entering at the trend line over here, because let's say you're entering over here, you know that the rejection is really strong. So if you were to focus on what we do every single time when we get to the trend line after it's validated, it's going to give you an invitation to enter as a buyer, like so over here. You see this very wick rejection telling buyers to come on, let's go in. But little do they know that now we have liquidity being over here and liquidity being over here. So two things happen. The first liquidity is grabbed from this portion, and then the second liquidity is grabbed from this portion, because remember, there is a form that is called break and retest. So the people that have the trend line situated in this manner, like that, let's say price has the 1 tap, the 2 taps, and then the 3 taps. What happens is there are people waiting for price to give a bearish trend, a retest to sell. So now that we have this push to the downside, also we have sellers saying, okay, we need to sell, sell, sell. And over here we have buyers saying we need to buy, buy, buy. So there's people trusting the trend line and there's people waiting for the retest and are selling over here. So the people that are selling over here, we have their liquidity situated over here. And the people that are buying from here, we have their liquidity situated over here. So this portion, all of this portion becomes liquidity. So we grab this and we know we are looking for buys because we have this break of structure over here, a body close over the wick. And after we have all these confirmations, grabbing liquidity, going back up, all we need is a retest back to our initial trend line to then take the buy. What I'm gonna do is I'm gonna clear the chart and let price play. Okay, so now here's what we're waiting for. We know that price has grabbed the liquidity from this portion. We know that we have a body closure from this portion. We know buyers are in control. We know the liquidity and the fuel is ready to go. All we need is a break back over the trend line, a retest back to it to take the buy. Here's what I'm gonna do. I'm gonna have my position situated over here. And once we have the tap into it, I'm going to let price play. So let's play candle by candle. Okay. Now we have the retest. So we have entered over here. But let's say you even want to play it safe. And let's say you want to extend your stop loss beneath the lowest low over here. You are now having, let's say you want to get to the high. You now have a 3%, 3.2% back. So let's say you enter with a risk of $1,000. If you win this trade, you get $3,260. But now, at least you have all the confluences lined up with you, and now you know that you're not operating like the normal retail trader, but now you also have a narrative. So we let price play. And this is what you want to see after you have the liquidity being taken out. And it's gonna fly up. Look, it's just not gonna stop. So you can target highs because now you have a complete narrative. You know that there was a break of structure. You know that this is a liquidity trend line. You know the liquidity is being taken out, and you know you're buying because you can determine the range. So this could be a model. Now, I'm gonna show you another example. Let's try and see what price does if we try and merge this with supply and demand, with break of structure, and with the correct narrative. Over here, you can see that there is a clear gap in the market, and gaps are often revisited, so you have to keep this in mind always, especially if you're selling below the gap. This is what I always say, never sell below the gap. So, determining the range, we have the highest point over here, the lowest point over here, everything in between is internal. Remember, the liquidity is residing up top. Now, if you notice, if you did, congrats, kudos to you. This over here is a mini liquidity line, but if you're in a trade, I would want for you to watch out for these kinds of manipulations. This mini liquidity line over here tells you that you should not be in the trade anymore. This is printing liquidity to be collected over here and then to have a drive to the upside. Now, you would ask yourself, why do we want to have a drive to the upside? Well, there's two reasons. Maybe to revisit a previous imbalance, maybe to cover a gap, maybe to grab liquidity and then continue to the downside. Now, all you want to do is wait for confirmation. If we focus, we know that there is a gap over here. Once that gap is revisited, we want to look for a break of structure under the low that started the push to that gap. Sometimes if we focus and we know that in trading, patience is the key to success, you're able to understand and avoid so many losses that you shouldn't really have and secure a lot more capital. All I'm gonna do is let price play and make sure the gap is revisited before I even think about selling. And once it's revisited, I'm going to stop and explain even more. Over here, you can see that the gap is now successfully closed. You can start selling after you have a clear indication of a break of structure beneath this point over here. So as of now, I'm gonna have it be a dotted line, and once we have the break of structure, we will change it and have it be a break of structure. Now, you might say, is this a break of structure? Is it not? Is it whatever? No, we don't need to complicate stuff. We just need to have a body close over the wick. So this is the wick, this is the body close over the wick. We know that sellers are in control. We know the liquidity is being grabbed. We know the gap is filled. Now we want to focus on finding our last imbalance, which would be this portion over here. So having this be the imbalance, this means this portion has to be revisited. Over here, you can see the imbalance is already closed. So this becomes a supply zone that we are ready to take sells from. Other than this, I would not want to look at this trade. I would want price to be revisited up top, and then I would want to target the low of the range for my first take profit and the low of the push for my second take profit, which would make a lot more sense. Notice how these two trades over here didn't end up playing out because they're simply the wrong moves. But if you pair this with price action and you have all of these details lined up with you, having liquidity being grabbed from the bottom and from the top, balancing out everything, closing the gap, breaking the structure, we said we were going to have this become a break of structure, like so. Now you can take the trade from this supply zone over here. Let's say I have this one over here. It could be situated over the high, but it could also be situated over the supply zone. For me, I would like to leave as soon as I'm wrong. So I would want to minimize my losses, have the first take profit be over here. So this would be a 3.59. And you're gonna think I'm crazy, but my second take profit should be at the low of the push. So at this portion over here, I would want to have first take profit. And then at the second portion, I would want to have my full take profit over here. Now, second take profit could take some time, but we want to make sure we secure the bag as soon as possible. So let's zoom in and let's let price play. Boom, and play. As soon as it's revisited over here, boom, taps back into it, revisits the supply, takes TP1. We already have 3.59%, and now all we're waiting for is the follow through. Let me speed this one up like that. And then you can see prices targeting back the lows, maybe covering more imbalances. And then quickly after, we have a follow through back to the downside. Now this could be a potential close. Price could obviously always continue more to the downside, but I like moving with the trend and leaving before it reverses. So this could happen, more liquidity grabs, but then quickly after, sellers remain in control. So this would be our last close. This would be a 14.2% return on the trade. I'm sure now that you think price is going back up, if I play, sellers are still in control because the zone is still not fully covered. You have more imbalances over here. And if I extend this one, and if I don't end up closing over here, you can be confident because you know what price action is doing, exactly like that. And then it's gonna keep on going and happening over and over again. Now, I hope you liked this video. And if you did, then physically and literally like the video. And if you have any other topics you would like for me to discuss, please do comment below. And as always, guys, I'll see you in the next one.